So good morning to everybody, or good afternoon, depending on where you are joining us from. Thank you very much for joining us today, and I would like to welcome you to Capital Link's webinar series. We are delighted to have with us today Dr. Nikolas Tsakos, the founder and CEO of Tsakos Energy Navigation, and Randy Giveans, the head of Maritime Research at Jefferies. I'm Nicholas Bornodis, president of Capital Link, organizer of the webinar, and also we are the investor relations advisor for Tsakos Energy Navigation, and we have the great privilege to work very closely with Jefferies and Randy. So thank you, both of you, for being with us. I will make a very brief introduction. As you know, TEN is one of the largest energy transporters in the world, one of the largest independent tanker owners, and a partner of choice for all the major participants in the global energy market. It has a pro forma fleet of 71 vessels, and founded in 1993. It is one of the oldest publicly listed companies, and the company has been listed on the New York Stock Exchange since 2002. TEN is known for its prudent growth and for a fleet development strategy that provides cash flow sustainability and visibility throughout the market cycles, while at the same time being able to capture the market upside. And the company has rewarded its shareholders with a steady stream of dividends, uninterrupted stream of dividends throughout the years, irrespective of the market cycle. TEN announced first quarter 2020 results, very strong results, coupled with a 50% increase in special dividend. And recently, TEN announced the contract for the building of up to 3 Suezmax shuttle tankers under long-term employment. I will mention that the discussion today will focus essentially on 3 topics: on the tanker markets, on TEN itself, and also I would like to remind everybody that Nikolas Tsakos has been the chairman of INTERTANKO 2014-2018, and therefore he has unique insight in the overall industry direction, challenges, opportunities, and so on. So with no more delay, I will turn it over to Randy and Nikos, just to remind you that you can submit questions live through the Q&A function on your screen, and then Randy and Nikos will be picking them up after the discussion, their discussion finishes. So thank you, Randy. Thank you, Nikos. Please go ahead. Randy, you have to unmute yourself.
Yep. Hey, thanks for having us, Nicholas. Should be a good conversation here. Nikos, thank you for joining us. So with that, you know, I know some people are maybe new to the Tsakos story. Some people are obviously interested in your background and how you got to kind of where you are today. So if you can just open us up with maybe a 2-minute run through of how you got to where you are today, and a quick backdrop of Tsakos Energy Navigation.
Thank you, Randy, and good morning to all of you from sunny Athens. If things were a bit more normal, we would all be here enjoying the after Posidonia events, the Greek big exhibition, seafaring and shipbuilding exhibition. But I think that we will do, and hopefully we will have a chance very soon to see all of you face to face without having to wear a mask. Let's hope that these days will come soon. Well, TEN is perhaps the longest running public company. It's a company that was established as part of the Tsakos Group, which is the Tsakos family group, going strong for 150 years in seafaring. And you can see one of our oldest ships in the background. I'm glad to say that in the middle we have some of the newest ships. So we have renewed the fleet over the years. TEN started in 1993 after, as a result of the OPA 90, the double design that for those of you old enough to remember was a huge environmental change in the shipping industry, and that's why we took the company public. We've been going on for, as Nick Bornozzi said, for 4 decades. We have been continuously paying a dividend. The company uses the crisis periods to acquire distressed, cheap assets that we either sell or trade very profitably in the future. Actually, this is our fourth crisis. For those of you that remember, between 96 and 98, we had the Far East crisis that actually depressed freight rates, but also collapsed new building prices. And that was the time that TEN started its very vast new building program at very low costs. We enjoyed a little bit of a better market after that, and I think we have a slide for those of you. It's on page 4, where you can see. Then we had the unfortunate events of 9/11 that really stalled world trade for quite a period of time, and again created opportunities. In TEN, in every crisis, we see also an opportunity. Of course, then we enjoyed the good markets between 2002 and 2008, and I think that was the bubble burst sometime in 2010 for tankers. And really from 2010 up, I mean, the last 10 years have not been a great period for tankers rates, basically because the market has been absorbing the overcapacity created between 2004 and 2008. As soon in 2019, we started enjoying a strong market. The unfortunate events of the virus in February, March really have created another opportunity. We saw rates really going to very high levels in the first part of the 6 months of this year, to more normal rates now. But in that period of time, again, because of the crisis, as you heard last week, we signed the contract for three shuttle tankers at prices 25 to 30% lower than what we could have done at the peak of the market. So what we try to do is a model that we employ our ships long term. We try to buy our ships during the crisis and low cost periods, and then employ them when the market becomes firm. So that's a little bit of TEN. We've been going strong for all this period of time. However, I have to say that we have in the last year, like most of the tanker companies, but especially ourselves, we are disappointed by the performance of our share, because we are valued as a distressed company, where TEN actually is a company going from strength to strength.
Great. Well, hey, thanks for that. We certainly have a lot of questions on Tsakos specifically, but before we get to those, let's just look at the market a little bit, right? So crude tanker rates started the year above 100,000 a day for VLCCs, above 50,000 a day for Suezmaxes. Those came off, in February. A lot of that was seasonal, and then they ripped to just like all-time highs in March and April. Floating storage, contango, all of these things. However, over the last, let's call it 2 months, rates have pretty much fallen on a weekly basis. Can you give us a little bit of context about that, about the big rally in March and April, and then the subsequent, reduction in May and June?
Well, yes, I think everybody was caught completely by surprise. First of all, I think we all had to run and make sure that our families and our closest to kin were doing good, our associates. So I think that was the first concern during the lockdown. And then slowly it took an effect where the price of oil, had an unprecedented ups and downs. I think we started the year at about $60, if I remember well, and we collapsed to supposedly negative figures sometime in April, and we're normalizing back in the 40s again. So I think with all these changes, you can imagine that a lot of storage, as you very well, the contango and a lot of storage came out. What we did in TEN during those times, when people were coming offering us $100,000 for a 6 or a 3-month contract, we chartered the number of our assets for a year at $30,000 or $40,000 or $50,000. So Today, where the market is taking the effect of the overcapacity out there, but it's changing again to more positive. As we saw with the OPEC announcement yesterday, things are starting to normalize, and knock on wood, if we do not have a second wave, which we hope not, things look to be back to where we ended last year in the middle of 2021. I mean, we were touching 100 million barrels of demand starting 2020. We all felt very comfortable. Everybody thought that 2020 would be a very nice positive year. Supply of tonnage is less, on average, less than 10%, lowest in decades. Demand seemed to be going well, and all of a sudden we had this setback by the virus. But as I said, in every crisis we look at an opportunity. I think the worst is behind us. We were expecting that the market absorbed so much oil that now is enjoying the cheap oil, both in products and in crude. But we are seeing that from the third, but the fourth quarter, things will be normalizing, and I expect rates will not go back to 100,000. But if we can see VLCCs in 50 and 60,000, it will be a very comfortable year for us.
Sure. And kind of currently, we're seeing these, in the mid to high 30s, maybe. Suezmaxes are 15 or so, Aframaxes under 10, I guess. So what is your reasoning for kind of the divergence there, where the larger tonnage is holding in pretty good, well above cash break even, whereas the smaller asset classes are a little weaker? What's going on there?
Well, as I said, as you said, the size is important. A lot of the VLCCs, there's a bigger concentration still in storage on VLCCs. So sure. The demand, the supply of those ships, the demand is not equal to the Suezmaxes. The second category on storage is Suezmax. So I think it has to do with the ships that are participating in the spot market. And that's why the larger ships are enjoying it. Of course, the shorter voyages, the Aframaxes might have a voyage of 15 to 20 days, so the market turns. The larger ships have voyages of 35 to 60 days, so it's a much longer process before the new rates. And I mean, we've seen them, as you said, from 60 to 200,000, down to 30, up to 60 again, back to 30 now. I think the next one will be closer to 50, I hope, in September.
Yeah, certainly all over the place. All right, if we switch over to products tankers, obviously you have a very diverse fleet here. What's going on there? There was a record spike again in April and May. Also contango in diesel and jet fuel and gasoline and those things. But now currently rates are in the doldrums, right? You're seeing LR2s at 15, LR1s at 10, MRs, some brokers are saying $5,000 a day. So let's talk about that market. What's going on there, and where do you see that going the rest of the summer?
Well, I think quite similar, and I think all of us we forget when we were approaching January 1st. It was very similar to the millennium bug. We were expecting the 2020 new IMO legislation to be the real, real game changer for the market for 2020. It seems so all this confusion, which has to do a lot with products being transported, has been forgotten. It is true that we had a huge spike in products because we saw most of them at very, very historically low prices. So people were out there, or buyers of products at very low levels. I think right now there is a lot of product all over the place, which is being consumed because of the low cost. It will, I think, by September, October, the trade will start re-erecting itself.
Sure. And then how would you say?
I mean, in our case, I mean, for those of you that have seen our presentation on page 3, you see the company's very diversified fleet, and you see that the majority of our product is trading in crude. So actually, we have 50, as they call them, dirty carriers, and 13 products right now, many of them on long-term contracts.
Perfect segue. As you mentioned, long-term contracts. how liquid is that 1-year time charter market? And what kind of rates are you seeing for a Suezmax, LR, all the way down to an MR for a 1-year fixed charter?
Right now, the one-year charter is significantly higher than the spot market, which gives
Sure.
the expectation that everybody expects a very good end of the year. So I would say today we could charter one of our Aframaxes in the mid-20s for a year, 23 to 25, depending on her size and ice class capacities. I think 27 and a half or 30 for a Suezmax, and low teens for the smaller ships. That's where 1 year is. We are not taking cover for 1 year. We expect the 1 year to be an exciting year. We have a significant cover of our vessels. We have right now 30 vessels on fixed time charters exceeding the 1 year. In addition to them, 15 vessels on time charters with profit share. So 45 out of 70 vessels are on some sort of steady income, and the remaining 25 vessels are on the spot market. What we try to do, and this is our CFO's strategy that has served as well, Mr. Paul Durham, is to make sure that our 45 vessels cover all our expenses, our bank debt, and all the requirements for the whole fleet, and the remaining 25 ships work for the dividend to our shareholders.
Sure. And then one more kind of demand question. You know, we're hearing already reports around OPEC and how they are going to stick with that kind of production cut curtailment, I guess, going from 9.7 to 7.7 million barrels a day in terms of cuts next month. So basically, you're going to see more production next month. How do you see that impact on the tanker rates, tanker market? Will we see more fixtures coming out of the Middle East? How do you view that headline?
It is a very timely and very welcome, I think, development, and we see it happening at the right time. We already, I think, experience more and more questions and phone calls in our charter department for business in August, and mainly for September. So I think that will start giving life to the market. I mean, we had a big shock. We as a company, we enjoyed the shock, and we tried to actually make it last longer by chartering our ships at lower than the peak rates, but for 18 to 2-year period. So we're enjoying a very positive cash flow now, and the market seems to be coming back again.
Okay. And then switching over to the supply side, right? The order book's very low. You still have a lot of vessels over 20 years of age. Scrapping was very high in 2018, pretty weak in 2019 because rates were very good and because of all the scrapping that took place in 18. Year to date, there hasn't been much scrapping. Obviously, rates were phenomenal, right? But also some of the scrap yards were closed for COVID and other things. How do you see those two sides of the coin for supply side in terms of scrapping in subsequent months and into 2021, as well as new build ordering over the next few quarters?
Well, I think this is a very, very, I mean, we actually debate this point on a daily basis. We do not expect, and I think we have a slide on page, for those that are following, on page 11 and 12 and 13 on the scrapping. What we are experiencing right now is not so much a new building, a slow new building because of financial only reasons. It doesn't make sense economic. It's for technical reasons, and I think this is a game changer. We are seeing right now, it's like being in 19. I mean, you were barely born at that time, but it's like being in 90 or 92 at the time that you had the unfortunate Exxon Valdez accident, without any knowledge of legislation, what would be the new ship to be built, which ended up being the double design. So right now, no one knows what engine to put on their ships. And that's why people are not ordering ships. I mean, you hear a lot of noises of people taking options on dual fuel, on LNG. I have been, through my INTERTANKO tenure, very much, I would say, negative on something that we have all by now forgotten, the scrubber issue. If you remember a year ago, if we were having this conversation, we would spend more time talking about scrubbers than anything else, which now it seems like, and I have been, and I mean, we did it in our company. We have not installed any scrubbers on our ships, thank God, because it would have been throwing money out of the window. And I am not sure that all these discussions about dual LNG engines will be the answer. I have a feeling that the actual main engine technology of existing ships will develop soon. So we will have, before the hydrogen design, we will have existing vessels, or not existing design ships that will burn better fuels, which will not require more new buildings. That's what I'm getting to.
Sure. And yeah, to your comment, I was certainly following the tanker market in 1990. I was only about 5 years old, very, very interested in the market. A few quick industry questions for you, right? As you mentioned, IMO 2020, not doing much scrubbers there. How has that changed? What has happened over the last, let's call it 7 months? Is IMO as big of a deal as it was, measured to be even in or hyped to be in 2018, 2019? Why'd you basically decide against installing scrubbers? Was it the cost? Was it the technology? Was it, a bearish view on fuel spreads? So if you can discuss IMO a little more, both from your Tsakos hat as well as your INTERTANKO hat.
Yeah, well, I think from on a personal and company note, it had to do with environmental issues. And, I have been the chairman of HELMEPA, which is the Hellenic Marine Protection Association many years ago, an association way before its time. And I could not accept the fact that we are, instead of polluting the skies, we were going to throw in the sea questionable residuals from the scrubber. So I mean, our decision was purely based on a gut feeling that it's not good to throw all this rubbish in the sea. So that's for us as the company. That has been how it has nothing to. We did not even actually sit down to calculate. My colleagues know that when anybody mentioned the scrubber word, even if it made a lot of sense by finance, etc., I did not pay attention to it because I was completely opposite to it environmentally, and that was the decision. Now, 2020, as I said, would have been a great game changer, but we had COVID-19 to compete with in the meantime, so it has been completely forgotten. However, our ships are still suffering huge expenses and losses from the quality of the new generation cocktail of bunkers provided. So in a sense, I mean, this is in the background, but I have, when I see my technical, our chief operating officer in the technical department, they are always very, very mad with what is happening and very upset with the damages. When I was discussing today in the operations meeting, we have 4 ships that are facing serious engine problems. And this is one of the companies because of poor quality ships. So it's out there, but it has been completely forgotten because of the because of the virus. And that creates delays. I mean, it will create, I think, better utilization in the market because of the delays. Not a good reason, but it is there.
Yep. All right, 2 more industry questions before we get to a handful of kind of Tsakos-specific company questions. First, there's a lot of discussion about the regulation for targets for carbon emissions and other things. The EU, recently announced it wants to include shipping in its ETS, the emission trading scheme. So, as a major ship owner, as former chairman of INTERTANKO, what do you think about this development, and what are your thoughts maybe on IMO 2030 or IMO 2050?
Well, I believe that the industry is the shipping industry, although very few people really appreciate it. It has a bad, I would say, name to it, which is not correct. Has always been proactive to changes, and I brought before the example of the OPA when you were 5 years old of the OPA 90. That was the industry without any subsidies, completely within half a generation, changed the whole structure of the ship. I mean, this double design is the biggest design change in ships since the sails. You came out from sails to something like that, and it was done without any big, without any governmental participations, any subsidies from everybody. So the industry always moves correct. I think we are a clean industry. We are the most efficient, economic, and environmentally friendly way to move large quantities of products, be it wet or dry products around the world, and we are going to carry our obligations to the limit. So if I do not really have a problem as long as it is a level playing field. I don't have a problem in participating in the new schemes that will be required.
Sure. And then in terms of kind of engines, fuel types, availability, all of these things, do you think the fleet will be able to renew itself, let's call it, in the next 20 years? And is there enough visibility right now for what kind of ships to order, or is there still pretty much uncertainty and people waiting on the sideline?
Well, I believe right now that there is so much uncertainty that for the next 5 years, we will be seeing a diminishing new buildings coming out until a new design of vessel is accepted. I do not see people taking a huge chance on LNG as a fuel. I believe LNG is a good interim solution. But what happened to the interim? It used to be the interim would have been something like 30 more years, and that gives you that covers the life of at least one asset and a little bit more. By bringing things down to 2030, you are changing. The goalpost has become so narrow right now that I think LNG is not. We have all we like LNG. We invest in LNG vessels. We believe it can be an interim solution, but it's becoming more and more a question mark than it was a year ago.
Okay. All right, so we have about 10 questions for kind of Tsakos company specific, and we already have a handful of questions in the Q&A, so I certainly want to leave some time for that. So we'll go through these pretty quickly, but just looking at Tsakos, obviously a very diversified company, unlike pretty much any of its peers, in that you have the crude tankers, the shuttle tankers, the products tankers, LNG carriers, all of these things. So can you discuss that strategy a little bit and what kind of advantages or maybe disadvantages that kind of fleet diversification provides Tsakos?
Yes, well, just to give the background, the Tsakos Group is a ship owning company of 150 years, and actually, if you really wanted to be diversified, you could include containers, dry cargo ships, and all sorts, which the group operates separately. So I would say we are a diversified energy company. Our model has to do with client-driven operators. We believe that we are, I would say, a good operator. That's what our charterers believe. A big number of our charterers, and I believe we have a very good cooperation with them. So let's say when a big charter, mention anyone, perhaps the old name behind here in my screen, or anybody would come, they might require an LNG, they might require a shuttle tanker. They like that they talk to the same people on the chartering side. They know the operators. We have clients that actually would wait and we pay a little bit more, not a lot, because of course charterers are not, they're not charities, but they will pay a little bit more to get one of our ships because they believe they will get a better service. So that's how we operate, and I think it is working well because we are going after long-term contracts that are accretive. We are not selling ourselves cheap. We have our CFO and our deputy CFOs here who are continuously with their nitty-gritty situation. They do not allow us. I mean, I get inclined when our charterer comes to do more business, but then I get told off by my finance department that I'm selling very, very low. So I have to up my price. Sure. And as long as we can get a cash return of in excess of 15% in today's very low interest rate. I mean, that's our target. And
what was that cash on cash percentage? Sorry.
15%.
15.
15.
Okay.
So that's we do not do contracts for under, okay, maybe 14, 16, 17, but 15 is where we do. And we do not look at business which does not give us back 20% of the equity invested. So I think these are the deals that we are doing now and we're bringing in the market. We do not do lower deals because otherwise we're subsidizing the big oil companies, and I think they have much deeper pockets than we have.
Yep, that's fair. And then looking at fleet employment, you are, again, unlike a lot of your peers in terms of your chartering strategy. That kind of lets you ride through different cycles. It kind of evens out your cash flow visibility and stability, right? So can you touch on that, kind of your chartering strategy? Do you think that's best in terms of adding shareholder value or in terms of your cash flow? If you look back, would you have been better suited just to operate in the spot market? So what are your kind of reasonings behind that chartering strategy?
Well, as I said, you are very correct. I think it's a different model. Right now we have a significant spot exposure with 25 vessels in the spot and 15 contracts with profit sharing. I would say if we were only chartering the spot, we've done this exercise. If we had chartered only in the spot for the last 28 years that we've been going public, we would have filed for bankruptcy 4 times so far, if we were only doing the spot business. But to be fair, we would have been able to achieve a lot of, very much higher market for short periods of time.
Sure.
But then we would have to go, to protect ourselves. We are a long term, and as we say, we believe that shipping is more like a marathon race rather than a sprint. So you have to keep your ammunition really there for the difficult days.
Yep. All right, and then on the fleet expansion, as you mentioned, you have been a proponent of kind of using restraint when it comes to new buildings and doing so prudently, responsibly. You are also remembered for a phrase you said at Capital Link. That I want to get the phrase right. Hands in your pockets, don't sign for new buildings. Right. That said, you've also ordered several new buildings for Tsakos, most of which obviously with long-term charters. But how do you count for this and kind of your fleet acquisition strategy?
Well, yes, I think we all miss the Capital Link days. Those days that we tended to meet each other off Fifth Avenue. It looks like ages, and we hope that we will have a chance very soon to see everybody there again. And I know everybody wants to go back to Capital Link basically for the coffee breaks and the gossip in the alleyway and the nice introductions and presentations. As we said there, we have some segments like the VLCCs that I think we will be investing because we are VLCC light. We only have 2 VLCCs. I think the size of our group should have at least 5 or 6 VLCCs when the time is right. So this is something that we will do even without employment. For the other segments, I think we are covered. I mean, we just did a very accretive deal on shuttle tankers. Again, 3 vessels against long-term employment. These are the business that we will do in new buildings.
Okay. Yeah, let's talk about that real quick. You know, recently you did the 3 vessels, long-term employment. You know, the COO stated accretive growth, renewal remains a cornerstone of the strategy. Give us a little more details around that, around the counterparty, you know, that the term of them. I think you mentioned it was like $250 million in backlog. But I didn't see anything in terms of, is that 5 years, 10 years, what kind of options there are. So that's also some questions in the Q&A. A lot of people are kind of wondering about that acquisition that you recently announced for the 3 Suezmax shuttle tankers.
Well, yes, as you know, the Suezmax or the shuttle segment of the business is a very specialized, very hard operating business, quite a small number of players, because it's really very demanding, and it has become even more demanding with the COVID-19 situation, where actually when you have, I'm going to digress a little bit, because one of the biggest problems we're facing right now is not being able to to change our crew from the ship. The shuttle tankers, which is a very, very demanding operation, so you might operate for 3 months on a continuous basis. We had the 4 months on, 4 months off for our seafarers. Now most of our seafarers cannot leave the ship because of the COVID situation. But anyway, this is an issue very important for shipping, and we are working to try and solve it on a separate basis. We like the shuttle tanker business. We have invested heavily in the infrastructure in the past, so we're very happy to have this business. It's a minimum of 5 years with options that take it up to 15 years.
Okay, so 5-year fix and then 5-year options thereafter?
Yeah.
Okay. Sorry, I had some technical difficulties there. And then on the debt, you know, according to your latest published figures, your net debt to cap is about 46%, I believe. Is there a level you feel comfortable with, you know, that you kind of want to maintain on the debt side?
Well, I think we would even consider, if we have long-term employments, go as high as the mid-60s. But I think 50% is where we feel comfortable with. But we still have some breathing space if we need to expand without having to, using our cash and conservative debt.
Okay. And looking at the dividend, you know, many years of quarterly dividends. Now you're paying kind of selling. That dividend is 5 cents. 25 cents.
Randy, we lost you, I think, physically, and now also your voice. We could hear a little bit of you, but now we hear no evil, see no evil right now, Randy.
Sorry, can you hear me better now?
Yeah, I can hear you now.
Excellent. So yeah, basically asking about the dividend. Right? 5 cents a share.
Losing you again. There's something.
Okay, can you hear me okay now?
Yeah.
All right. I don't know what's going on there.
I think do not mention the dividend word again.
I know, apparently that is the key word that kills everything. All right. 25 cents a share on the split adjusted, 37.5 cents when you include the kind of for the special dividend here. So how should an investor kind of look at dividend policy going forward? Is there a minimum with additional special dividends going forward, or what is the longer term plan for the dividend?
Okay, actually I did not hear most of your question. I only heard about 5 or 6 times the word dividend, but I will answer so in order not to take too much. For us, I mean, we, as you know, we are, or I am, and the management is the largest shareholder of the company with more than 40% stake. We are a dividend-paying company, and I think we are trying to place TEN in a way that it can always pay a dividend. I think our aim is to continue and increase the dividend as we go forward.
Okay, that makes sense. share repurchases, right? That's also been a question we've been asked a lot in the Q&A as well, which I'll get to in a second. But looking at share repurchases, how much remaining is your share repurchase authorization? Is this something you plan to pursue, more aggressively now with your shares trading at a, I don't know, 40, 50% discount to NAV? It seems the most accretive use of cash. What are your thoughts on that? Common share repurchases.
I did not, again, we did not hear the whole thing, but I'm going to talk about share repurchase because I heard that from what you said. I said, since we announced our share repurchase in early June or late May, early June, we have invested more than $6 million in the common share buyback. And on top of that, of course, we are putting aside a significant amount of money because we will be replenishing on the 31st of October our Series C almost the 9% paying preferred. So I think we are moving. I mean, we are really. We believe our share price is right now very attractive, and that's why we're buying it. But I think we're also using our cash, put some of the cash aside for the repurchase of our preferred, which is due on the 31st of October. The company has its building cash anyway.
Got it. Okay. That was the question about the share repurchases. Also, looking at your liquidity, right? Tsakos has always opted to keep that strong liquidity position. I think your latest cash figure is about $220 million. So what's your rationale for keeping such a high cash balance, and where do you plan on using it?
Well, I think, Andy, you only appreciate the value of cash when you do not have it. And this is something we do not want to be in a situation to do. We believe that this is, we are a highly capital intensive industry. We need to move forward fast when we need to. We use our cash, first of all, to operate our ship safely, to pay significant amounts of debt. And I think if you look, we pay, close to, we have paid close to in excess of $300 million in debt and plus another 15, preferred 350 in the last 3 years. So we pay debt down by creating shareholder value even higher. Then the next target is to pay dividend, then renew our fleet, and then do the buyback. So that's the use of our liquidity.
Got it. All right, that makes sense. Let's get to some of the Q&A questions. I have a few more of my own, but I want to make sure that the Q&A is also answered here. So we talked about the diverse fleet. We have a young investor here who says that their largest position is TNT. So what investors like this person is asking for is kind of what is your plan going forward about basically bridging that gap between the market value of your shares and the net asset value of your shares?
First of all, we want to thank him for having such a significant stake in the company, and I think because at 22 it's a very significant at any age, but at 22 it's a significant stake. We are also very surprised about the performance of our share in this environment. I mean, we hope we're doing right in operating the company, on making it profitable. I mean, all I have to say is from what it seems, we had a very good quarter. We have a similarly good or better second quarter, and the remaining of the year seems very profitable. Dividends will be, hopefully that will be able to change the share price dynamic significantly. I mean, I believe that the share price should be doubled from what it is today.
Got it. Okay, yep. That's fair. And then the next question was the reasoning for the reverse stock split. You know, what was the reason behind it, the objective, and are you surprised at how the market has reacted to it?
I have to say yes. You know, the reasoning was that we had advice, and we have advice from our financial advisors that there is a significant amount of investors that cannot participate in any shares that are under $5, and that will significantly increase our presence to other shareholders, more institutional shareholders, and that was the only reason we have done that. You know, I was expecting a positive reaction. We had only had a couple of good days in the beginning, and now we're under the issue price, but hopefully with the new changes in the industry, we will be above 10 very soon.
Okay, that's fair. Next question is looking at kind of your preferreds, right? I know you bought back some previously. What are the plans on the remaining preferreds, all of which are selling well above the common, or basically well below the $25 par value?
Excuse me?
Any thoughts on repurchasing the preferreds trading well below $25 par value?
Yes, yeah. I think our main objective is to buy our obligation, which is due on the 31st of October, and you know, after that we will be looking at opportunities on a continuous basis to reduce our exposure to the more expensive perpetual ones.
Perfect. All right, another question. You know, I've got it about 6 times here, so I just want to make sure the answer was clear in terms of the recent acquisition for the 3 shuttle tankers. You know, they're even if they were at a discount, you know, maybe a 5-10% discount of NAV, whereas your shares are trading at a 40% discount of NAV. So in terms of use of cash, why not do share repurchases instead of the acquisitions of the assets?
Well, I think this is a fair question. I mean, the difference is that we are a shipping company. I mean, we perform a service of buying and selling ships. So this is our first obligation, to be a shipping company. And you know, we also have the buyback on our shares as a secondary. And you know, as I said again, our target is to operate safely our fleet, pay down our debt, and renew our fleet, and buy back when it is so cheap. But if we keep on buying big amounts of our shares, we will have a much less liquid share for investors.
Okay, I think that answered it. Now looking at your crew changes, this question is about the delays in crew changes. How is that being addressed by Tsakos and by the industry in general?
Well, this is you know, I'm glad you asked this question, because it is ships are not unmanned. They are manned by approximately 20 people, seafarers. So we have at any time on board the ships 1,500 humans, men and women, and the same amount of people on land waiting to board those ships. So it's a big problem. We have fatigue for the people on board, because you know, after 6, 7, 8, now we have people that are there 14, 15 months. So actually, it's, you know, it's like they are isolated and been kidnapped. I mean, we all of us had to lock down in our home environments with our families, and can you imagine if you have to do this for 14 months without your families and around the world? So it is the biggest problem. We are pushing governments. There's a lot of complications. I mean, we have charterers that might not charter your ships because your crew is suffering from long work fatigue. At the same time, same nations of these charterers will not allow people to work and disembark and change the crew. So it is actually, this week we've been fighting this battle. We had the conference. We got 20 countries to sit together to agree to allow seafarers to move around the airports and make sure that they can go back to their families. And then you have a big amount of hundreds of thousands of seafarers that are impoverished because they cannot go to work. So it is a significant problem.
Sure. Another question here. Investors seem to prefer pure play tanker companies. We talked about your fleet diversification and the benefits to it, as well as maybe some of the disadvantages. But again, kind of your reasoning around owning the diverse fleet, and any thoughts on selling or possibly spinning off the product for crude oil tankers, LNG, shuttle into their own unique company?
I mean, as you know, during the peaceful times of investment bankers, in order to generate fees, rightly so, they come up with all sorts of ideas. I think that we will stick to the model that we are operating now, because for us it's I think actually operating a non-hands close to 100% efficient and safe fleet is as complicated, if not more, than running a different number of fleets. So I think we will stick to the model of diversified vessel and fleet in tankers and energy that we have.
All right. And what about selling off older assets? Another question here.
This is right now our big goal. We're hoping that the market will correct itself in the third and fourth quarter. I think we have half a dozen vessels that are sales candidates. As you know, we have sold everything everything that was approaching 20 years old, all our 202 vessels. Now we are down to our older vessel is 14 years old. So we are looking for selling those ships. So this is a very, very important part of our strategy.
Perfect. And then another question here on the equity valuation, right? The plan for boosting the value of TNP stock. And then what kind of benchmarks or valuation metrics do you look at? Is it price to NAV? Is it price to book? Is it price to earnings? Is it EBITDA? And then what kind of returns on common equity are really achievable over the next, 3 years? So handful of questions there around your stock, around your valuation, as well as kind of your return on common equity horizon.
Well, I think we look at, we look really on a deal-to-deal basis on the return of equity. I mean, we have, let's say, 10 million of equity to be invested on a ship. We would like this equity on the employment, on the foreseeable charter of the ship to earn anything between 15 and 20%. I think this is something we achieve on the long-term contracts. And as I said, we would like this to be close to 15% cash-on-cash return. Our cash cost, because the company has the luxury to have very, very competitive debt finance, our debt cost is around 4% all inclusive, and that's on the high side. And so, if we can net 10% above that, is something that we are looking to achieve. As far as valuation, I think the best way to look at it is the return on equity. If we continue the way we are looking to continue, I think we might be valued at one times earnings for 2020 and 2019, which I think it's a very, very low valuation at any standard. It's illogical.
Okay, and one market we haven't touched much on is the LNG shipping market. Rates there are $28,000, $30,000 a day on the spot side. You have a couple of LNG ships, so can you discuss the kind of terms, the chartering terms on those carriers, as well as your outlook maybe for the LNG spot market here over the next few quarters and years. So a little on the LNG market.
Yes, I mean, LNG being a diversified energy operator, we believe that energy has a role to play in our tanker fleet. However, I was never sold with the idea that LNG is going to be the solution for everything. So unlike a lot of our peer group, we have not invested heavily in that market. We have followed every development. We are continuously in the market. And one of the advantages we have of being diversified is that today, we can look at the LNG market comfortably because we have 2 of our LNGs covered well into next year with very, very accretive rates. And we are in final negotiations for a 5 to 15 year with options charter for our new building LNG. So we are following the market, but we do not have 15 LNGs unchartered or unfixed in a poor market like other companies might have the opinion. Of course, if that market was booming, then we are losing of not being in that. But that is what's helping us for being diversified. We are able to control our risks.
All right, and then last question here. It looks like from the IMO 2020 side, for the VLSFO, you mentioned earlier that you faced some technical issues or even damages due to poor fuel quality. This, of course, obviously creates some cash flow issues and maybe worst case, some kind of loss beyond your initial budget. So the question here is, what is your strategy to prevent such cases from happening?
I think this is a very important. I mean, we are putting a lot of effort with our technical team. One of the reasons of having such, it was my decision or our decision, together with the chartering, to charter all our ships well within 2020, last year, at the time when, of course, no one was considering the virus. And our biggest problem was what will happen on January the 1st, 2020 with the new legislation. So that's why you will see that our fleet is well covered before that. So the majority in our fleet, the technical issues affect as far as some repairs are, but all the downtime and some of the repairs we are charging back to the charterer because, as you know, on a time charter basis, the time charterer is responsible for providing the appropriate bunkers for the ship. So we are in continuous discussions with them, and they are covering a big part of those expenses by being on time charter.
Perfect. And yeah, the technological issues are certainly real, as we saw in the last 20 minutes. Technology is great when it works, right? When it doesn't, it's a little frustrating. But thank you so much for the time. If you can just give us some last minute kind of closing remarks on the tanker market. People are freaking out, destocking, these companies are going bankrupt, if you can kind of calm some fears there. And then on Tsakos, right, there's some frustration in the undervaluation of the stock, of the performance recently, and I'm sure you can echo those sentiments. So if you can just give some closing remarks on the market as well as Tsakos, I think that'd be greatly appreciated.
First of all, thank you for the platform you provided. And if someone is most frustrated with the share price, is myself. Of course, my role is not to look at the share price every single 4 o'clock, but to try and create long-term value for our shareholders. And so I try to balance those things, but we believe that our share price is very, very low right now. TEN is a company that is going from strength to strength. We are looking that we have navigated the stormy waters of the first, I would say, 9 months of 2020 very positively. I think we will be coming out with the results just after, as we do every year, just after Labor Day, that I hope are going to be positive in every way. and by that time we expect the market to be even stronger. I know that a lot of, I think one of the perhaps problems we have is because we are associated as an energy company with the problems that happen when the price of oil collapsed from $60 to minus or very little. But we are actually the energy transporters that any fluctuation on the price of oil is very positive for the utilization of our ships. So I think we are valued as a distressed company, but we are a very solid company right now. And thank you for the opportunity to give me the chance to try and explain this. And looking forward for better days ahead in our share price. And I hope everybody stays safe and try to enjoy a little bit what's remaining from the summertime.
Yep, absolutely. Thank you again for the time, and certainly looking forward to doing this in person soon, so we don't have to deal with the technology. But thanks again, and you stay safe and healthy over there as well. Nicholas Bornozis, I'll turn it back to you.
Well, thank you to both of you. It has been a very interesting discussion across the industry, the sector, the company. So thank you, Randy. And of course, thank you, Nikos, for making yourself available. I sincerely believe that these in-depth discussions provide a lot of insight and a lot of value to a broader audience. And I appreciate very much the fact that both of you were available to do it. I'd like to remind in closing that this webinar will also be available as a replay for anybody who would like to come back and listen to it again, or for others who may want to tap into it. And we will be sending to everybody again the presentation. If you would like the 10 presentation, please email us at shipping@capitallink.com, and we will email a copy to you. But I believe we have already emailed to every participant a presentation already. And again, thank you very much. Let's stay safe, very important. And we look forward to the next one. Thank you to both of you.
Thank you very much. Have a great summer. Thank you.
You too. Bye.